we are back with another video. I just woke up. I got my necessities, you know what I mean? But you can hear my voice is like kind of geeked. I'm like, my eyes are completely cooked. But it doesn't matter. It doesn't matter. I'm making this video because some guy I know said that after I talked a little bit with him, he realized how complicated this is, and it's not, bro. It's really not. It's really not. So, um, and I like don't want to keep explaining to people this like over and over again. I just want to make a video and then say, yo, just go watch my video and you will understand, right? So, going into the chart, right? I don't really know what to call this because like I'm not being retarded when I say this. I basically figured this out by myself through countless of hours of ICT, well, hundreds, if not thousands, of watching ICT, studying the concepts and applying it. And I kind of, you know, figured out a way. And I want to clarify that. We'll dabble in the lower time frames, but I want to say some key things first. First of all, what I'm saying here works on every single time frame. If you dig it deeper, you will see that every time frame aligns. You know what I mean? However, what we're going to focus mainly on is getting the context right for our lower time frame trade, because your entry doesn't mean shit if the context is wrong, right? You'll still lose. You're just because it looks like a good trade, if the context was wrong, you just lose. You know, it happens. So either way, we're gonna get right to it. So when we have a range, right, and we have a high here and a low here, okay, and let's say we have previously swept a low here. What happens? Okay, we create a range from high to low. Since it's going from high to low, it's a bearish range, right? Why is it a bearish range? Because any retracement is going back into a premium, not a discount, right? You're already at a discount. You're at the very, well, no. Yes, actually, yes, this is correct. Sorry, my bad. I thought because you're shorting, so you want to short when it's expensive and you want to buy when it's cheap. Um, so every single time we take out a low like this, you have to ask yourself, okay, on the same time frame which this range is, okay, now this is important. You can't drop time frame. If this is an hourly, you want to see an hourly gap form somewhere around the midpoint of this range. If we do, there is reason for you to expect that any move higher will just be a retracement before we go back down and sweep this low, right? But now, if we don't sweep out, or if we don't create a new gap here, right, then there is really two things that are going to happen. We could still either retrace or we could reverse. Now, if there's no gap on the same time frame here, you have to ask yourself, did we displace through this low? If we displace through this low, it's still likely to continue lower and you could potentially drop in time frames. But if on the hourly we are rejecting this low, wicking it, consolidating here for a bit, right? The most probable thing to do is to mark out this high and use it as a retracement point, right? Because you don't know, again, if we do reject this low and we go back higher, you have to ask yourself, okay, now we've hit this high. Have we created a new bullish gap here that we could use to go higher? If the answer is no, or if we reject this high and we struggle to go above it, then the likelihood is, potentially we go back down, right? So can you realize real quick how inside of this range we created a range and then another range and then another range and then potentially another. It is very, very cluttery, right? But it's a range inside of a range inside of a range inside of a range. It just keeps going. It keeps going, and every single time, right? Every single time we sweep one of these highs out. Every time we tag a gap within that range, anytime we sweep out the low, you have to see how we react. Do we disrespect or do we respect, right? It's gonna be hard to show examples about it in this example, but it'll be easier when we'll go into the charts and we'll start looking for it, right? But I just want you to kind of start looking at it in this way. So if I go on an hourly now, and I'll go on Monday's price action. Guys, I think it was a relatively good example. But I don't want to only use good examples too, though. Keep that in mind. Either way, when you're going into Monday's price action, right? Let's say you're trading 9 a.m. Let's mark out 9 a.m. So every single thing on the right here, we ignore. We ignore it, okay? We do not know what happened. We're only looking towards the left to try to understand why we went high, right? We're using hindsight to our example here, keep in mind, right? But we are using a specific way of looking at it that if you do multiple times, I promise you, you will see over and over and over again it working the same way. So what happens? We mark out midnight open. Midnight open is a very important time of day, okay? If whether you vertical line it or you mark it out like this, up to you. But what happens? We went higher, we sweep out external high. Bro, did just fucking plane crash outside? I don't know. Either way, but what happened? Okay, we create an hourly gap here. But what happens is another thing that I'm gonna talk about real quick because it's already a perfect example. When you have this kind of price, right? We displace through this high, do we? Yes, we create the gap, everything is perfect, but what happens? We sweep out the high of the gap before tagging out the gap, right? This gap, this high is swept, and we're closing super bearishly. We're leaving a big wick, taking out the high. When we do this, you immediately have to, you don't have to scrap this hourly gap, but you have to look at this gap as very, very low probability because this gap only works if the high is left in place. We'll see that later. Same example. And especially when these kind of candles happen at extreme points. I want you to realize that as well, okay? I want to realize that as well. That's happening at an extreme point. But I also want to say, if you want to mark out these gaps, you are perfectly fine to do it because I promise you, 8 times out of 10, you will just never get a good entry from them. As long as you're super strict on your entries and you're waiting for a proper reason to entry, 8 times out of 10, if it's really wrong, right? If this gap really is supposed to not work, you're just not gonna get a trade from it, right? So it doesn't hurt if you're unsure. And that's the beautiful of it, right? Because if you're unsure, just look what happens, right? Just look. If you have no idea if we're gonna react off of this gap or not, mark it out and wait for a reaction. If you get a reaction, perfect. If you don't get a reaction, unlucky. It just wasn't meant to be, right? So either way, we do that. We now do what? We inverse this gap. We're bearish currently, and we sweep out this low, which would be considered what? The external low of this range from this low to this high. Now you have to ask yourself, did we displace through it or did we reject it? Well, I would argue that a closure below this low, significantly like this, would be considered a displacement. Now the next question is, did we leave relatively clean gaps within that range? Sure we did. We have 2 consecutive gaps here. Now yes, we have this gap as well here, but I rather using the consecutive gaps as close to where we currently are, essentially. Now another key thing which I mentioned here, what happened? The low is left. The low is not taken, right? Giving you a what? An actual viable fucking draw. So from this gap to this low is a perfectly fine shorting opportunity. Now again, we might dabble in the lower time frames, but essentially now from this gap to this low, you have already given yourself a potential place to trade. right? But now, again, I want to focus on the context here because I want to help you understand where to look for a trade. So inside of this, it's perfectly fine to look for a short towards this low. Now it's important. The second this low is taken, what did I say? We have no idea if this low is going to be disrespected or respected. You have to ask yourself, I was going to say two things, but honestly, one thing is coming into mind. You have to ask yourself, is there more draws below? When we've already hit this void imbalance, right? And we are basically only below midnight open for the whole day, right? And we have this current daily low. Is there really much more room to the downside? I would argue not, right? And I want to clarify as well. When you're taking this trade, it is somewhat okay to continue holding your trade, but the second this low is taken, every trade immediately gets cooked. Immediately gets cooked, right? In order for you to get a new trade, you either need a 5-minute gap and a very nice reaction if it happens, right? Or you need to wait for the hourly to give you a little bit more context. In this case, what do? It shows you that it's rejecting. When it's rejecting, what did I say? We're going to target the high instead, right? Now, when we sweep out the high, you need to ask, okay, did we displace through it? Or did we disrespect it? I would not consider any of this disrespect. When you're looking for disrespect, this is what you're looking for. Wicks, multiple candles of wicks, hesitancy to go higher, right? Here we close above it. It's shallow, right? But is it a big wick? Is it really rejecting anything here? I would argue not. And it leaves you, most importantly, 3 consecutive very, very nice gaps, right? So at this point, it's pretty humane for you to be like, okay, it's looking mighty likely that we might actually end up going from this low back to this high, right? So again, in a case like this, if you're gonna go back to trading Tuesday, right? I just want you to understand the kind of context. What are you gonna do? You're gonna mark out Monday's high as a range, and then Monday's low. Now I'm gonna delete this, but if you want some homework to do, mark out this gap right here at 28th of July, 1 hour chart. Mark it out and go into here and see, was there a 5-minute or 15-minute entry I could have taken here? And if you want to, look for, if when we've already started going lower, look for if there's a 5-minute gap that could have given you a potential trade. Okay. Now again, why are we using this range? Because now on a higher time, well, if you look from a higher perspective, this is one range, right? From this high to one low, but then this low got taken, right? Then this is a new range, right? And then this right here, after we sweep out that high, was a new range. And you just kind of go, and it kind of keeps going like that, right? Well, I guess you could use it. But from a larger perspective, this is still the main range we're trading in, right? And now you have to ask yourself, okay, did we leave any clean gaps inside of it? The answer is no. And you might say, okay, but this gap, okay, well, I'm going to tell you why we don't really want to care about it. And the reason why is essentially because we already respected a gap previously, this gap right here. We swept out the low and we rejected the lows. And then we did what? We displaced, created new bullish gaps. We created new bullish gaps. We created a change in the state. We inversed a gap that was previously respected. And that's the key thing. The fact that a previously respected gap was inversed shows you, there is a fucking pretty high chance the high is going to be swept, right? And again, this is a random time of the day. This is Asia session, but I'm just doing this for you to understand how to look at it, right? And I want to also say real quick as I'm going through, this is maybe a little bit messy, but I want to say, if you're trading 9:30 to 11:30, as I am presuming you do when I'm making this video, if you are taking one trade every single day for more than a week, there will be rare occasions where there will be 5 very good trades from Monday to Friday, 1 trade a day, But if you're taking Monday to Friday, one trade every single day, only trading 9:30 to 11:30, I'm sorry to bust your bubble. You are either forcing trades or you're just taking bad trades. At least two times. At least two times. A good trade every single day does not happen at 9:30 to 11:30. It does not happen. A good trade happens every day, but not 9:30 to 11:30. It fluctuates, right? And personally, I have not found a way to know when it's gonna happen, right? Timing it. I have just realized that if you just wait for price action to align, you'll get it, right? But that can be any fucking day of any time of the day, right? So unless you're flexible with your trading times, if you're taking more than one trade 3 times a week, in my opinion, you are probably forcing or taking bad trades. I want to even go further and say, I think it is a higher chance that you'll get 3 good trades in one day than that you'll get one good trade for 3 days straight. If you're trading 9:30 to 11:30. Because when price action is already good, it's gonna be fucking good. You get it? But when price action is shit, it's likely not gonna give you anything. Right? So I genuinely think it is easier to take 3 wins in a day than have one good win 3 days in a row. Okay, I want you to kind of think about it. So I'm not telling you guys to, well, maybe I am actually, but just realize this. Think logically, use your judgment to your advantage and ask yourself, if last week I took more than 3 trades in 3 different days, right? If I traded 4 days and I took a trade every day, or if I traded 5 days and I took a trade every single day, and I'm only trading 9:30, objectively, they're probably not the best trades. And go through your trades and ask yourself, which one of these trades was not really good, and try to cut those trades out because they are hurting you. They are really hurting your progress. Furthermore, we're gonna go back into it. Let me take a sip. I hope you can kind of already understand though how this is very simple. It looks complicated. It's really not. So I'm gonna remove all this and actually we're gonna add back this. Now, what has happened? We have swept this high. So now you want to ask yourself, do we displace or do we reject? Well, this candle closes above, but this candle is down closed. But the high here is left in place, so we'll mark out this gap. But what happens then? Oh, the high of the gap gets taken before the gap is tagged. So this gap becomes what? As I said here, increased, or not increased, but super low probability, right? The gap is immediately like, oh yeah, no, I don't like it anymore. Then this candle is really what sells me, and I hope it's not really difficult for you to see. We're consolidating. We sweep out again the highest high at that point, and we have this massive wick, massive, bro, low tape of it, massive wick to the upside, while still closing below it, significantly below it. Right. At this point, you have to ask yourself, okay, well, we're clearly rejecting this high, and I'm willing to, but again, we're not going to do it, but if you want to, go to this 9 a.m. candle, 29 July, and look, is there a 5-minute entry here that you could be going short? All right. Now, you have to still look down here, because if you think that this high is being rejected, and this gap is low probability, you have to ask yourself, okay, is there anything else? Well, there are these gaps right here. But what is the problem with these gaps? It was already tagged, right? So we remove the gap and we use the low instead, right? Very simple. If the gaps were already tagged, just use the low of the lowest point inside of the gap. Now, what is this low? If we're taking this trade, we are expecting us to go towards this low relatively fast. Now, we are still trading towards this, but once this low is taken, you have to ask yourself again, okay, what, happened? What happened? What do? We displace through, we hit that low, this candle plummets us, but it misses the low, barely misses the low. We create the up close candle here, but to realize a very important detail, the low was never taken. This low right here, this low is kept, right? It's the same way that this didn't. The low took it. Same way here, the high got taken, but this low was kept. What conclusion does that leave us with? It's still fucking bearish. It's still very likely bearish. The draw is still not met. The draw is still not met. Now you have this hourly gap right here, but if I remember correctly, this gap was actually SMT'd with ES, which is, yeah, it was. Yeah, it was. No, actually it wasn't. But ES actually had, wait, okay, let's double check this. Is this a gap? Well, it's a gap. I'm not gonna complain. It's a tiny gap, but the fact that it is a gap is already enough for me, right? So if you saw this gap, and ES looks much better here, but I don't trade ES. I look at it, but I don't trade it. So if you saw this gap, which is again a little bit difficult to see, it would have perfectly fine to take a trade off of it if you got that 5-minute inversion, 5-minute whatever, right? Again, very simple. Displacement through this low, hourly gap, low being kept, right? The lows have not been taken. It's important, right? Important detail. Low is not taken. Hourly bearish gap for the context. You drop into a 50-minute or 5-minute and try to see, is there an inversion here? Is it a 5-minute retap and a 1-minute displacement? Is there 5-minute, displacement candle? Something among those lines. Okay. All right, now I'm gonna do one more day, but we're actually not gonna do these days because I feel like it's too good of examples. So we're gonna go to a random day and see what we can see here. And we are using hindsight to our advantage. This day looks like, it kind of looks like shit, I'm not gonna lie, but maybe the shit part is good. Okay, when you're hopping on this day, what can you see? Well, let's talk about it. We mark out 9 a.m., which is right here. And again, we are trading 9 a.m., I'm presuming, so we're only looking at the left side. We're looking at the left side. Now, I did say this is only going to be hourly based for the most part, but I can already tell that there's a 4-hour gap inside of here, but we're going to ignore that fact. We're just going to use everything else instead. So, let me actually take a look here. Okay, so does it take a genius to see that this is a very bullish range? Yes. No, it doesn't. Sorry, my bad. It doesn't. And now we've started to going lower, but you have to ask yourself, okay, did we create bearish gaps? Are we finally showing willingness to actually go lower? I think the answer is pretty simple. It's no, right? But we displaced through this low, and then we inversed this gap. Okay, you're absolutely correct. Did we create bearish gaps? No, we did not create bearish gaps. Actually, let's double check this. No, that's not a bearish gap. So what is the conclusion to be left up here? Well, we have no gaps, bearish gaps. We still have bullish gaps. Sure, they were used before, but would you rather trade with non-existent bearish gaps or existent bullish gaps and lows? Again, if we remove this gap and we use this low instead, I think it becomes a little bit simpler on what to do. Now, I will say this. In these kind of scenarios, right, you will always see that the trade happens after this low is swept. Because when we have this displacement straight down, it is very rare for us to just go straight back up, right? Very rare. But usually it's easier to see. Why? Because usually we'll leave an hourly gap here, retrace into it, resweep the low, and then go higher. But in this case, we didn't leave any gaps. So a lot of people will be like, oh, okay, let me just fucking start longing. It's just incorrect. You still need the proper context, right? You still need disrespect or respect of the lows, and you need 5 minute or 50 minutes to, swap swap sides, I guess, and start moving in your direction. Now let's look real quick if ES had a gap here. Not that that's very important, but I want to check, and did not. So essentially, okay, when this happens, right? First of all, I want to say this. This is the low you would be using. So when this low is displaced through, right? What does it leave you with? Well, what did I say? If a low is displaced through on the hourly, but no hourly gaps is created, you can drop into a 15 minute to look for a resweep. You can do that if you really wish to do it, right? If you really wish to do it, you can. And again, as I said before, it never hurts you to mark out the gap and look for the reaction. If you don't get the entry, you won't get the entry. Okay? 9 times out of 10, the way I entry is obvious. It's super, super obvious candles. If I don't get a trade, or if I mark out a gap, I will just mark it out and see, okay, do we react off of this gap? And if we don't, fuck it, I didn't get a trade. What the fuck is the matter, gang? You know what I mean? But essentially, again, when you make this new range, displace through it, what do you have to do? Well, you have to mark out this low and be like, okay, well, now, until what? This high or this low is taken, I can't take a trade. There's no gaps unless you decide to go into the 50-minute, and potentially there is something here on the 50-minute. I don't know. This is a complete random day. But other than that, this is really the two choices you have, right? And you see at 10 a.m. we do fuck all, at 11 a.m. we do fuck all. So again, if you traded 11:30 today, or 9:30 to 11:30, you would have gotten probably nothing here, realistically, right? Because the move even lower doesn't happen at 1 p.m., right? Even if there was a way you could have caught this short down here or the longs back up, it doesn't happen at 9:30. So it's kind of like, okay, do we just, ignore it? But I still want you to understand how this is tradable. So again, how are we looking at this? Low, high, the most recent, displaced through, no hourly gaps, mark out low and high as external low and high. If one of them is hit and respected, right, and showing willingness to turn sides, it's likely that the opposite range is going to get hit. What happens? We sweep out this low eventually. This candle doesn't really tell you anything. Then we resweep out the low. And now this candle does what? At an extreme point, sweep out the low, leaves a big wick, and closes bullishly. I can almost guarantee you that inside of this gap, or inside of this candle right here, is a very nice 5-minute displacement candle or some reason to entry. And quite frankly, I wouldn't even hate you if you just took an entry based off of this hourly right here. I don't think that's bad at all. But that's kind of how you have to look at it. Now, I just put a lot of emphasis on seeing very obvious trades. And that's why this is being so good. Because I promise you, if it's not going to work out, you will never get the entry we're looking for. So we are actually going to jump into the lower time frames here and see. Okay, well, I can already see that we have a nice gap here. Well, it's not really nice, but we have a gap here. Right, we have this gap right here. But why is it not nice? First of all, let's explain that. We're at an extreme point and we're creating rejection candle right here. It's not really nice. But then again, pair that with the context of the hourly actually displacing through that low, it leaves much more probability for the fact that this low is actually going to get reswept from this gap, right? Because the hourly is still telling us that we're bullish. The hourly is not rejecting, right? The hourly looks like it still bearish, sorry. The hourly still looked like it wanted to resweep that low. That is why it is somewhat valuable to still use this 15-minute gap. Now, I'm not going to tell you to use it, but I'm going to say, it's somewhat valuable. So, do I want to drop into a 1 minute? No, I want to drop to a 5 minute actually. You drop into 5 minute and you see. If we're looking for the most obvious out of the obvious candles, I can already tell you it didn't really happen here. Well, that's a lie. The first thing that gets my attention is, again, you have to look first at what's happening on the left side. You can't be looking at, oh, when did it go down? What happens? We have a gap right here. What is this? Can you just appreciate how this is another range inside of the bigger range? When I see this, I'm like, okay, let me mark out this gap. So this gap gets used. We go higher, sweep out the high, create a new gap right here, and we inverse it. And we inverse this gap as well. And we give you a change in the state. And this is a relatively good displacement candle overall. I don't think this is the worst thing I've seen. If you took this entry, I would not be necessarily annoyed, but realize how I actually had to think in order to get that entry, and realize how it came very fucking close to your stop loss point before going lower, right? And there's a very high likelihood that this was a SMT right here. Very high likelihood of that. This is still not the kind of trades we want to be taking, right? It's not super obvious, right? Every time frame is kind of, not sure what it wants to do. Now, I want to show you an actual entry you want to be taking that I actually took this week. That's like, it's a no-brainer. So this is Monday's price action. If you looked at it, I told you earlier, mark out that hourly gap we have here. Now, can you just appreciate how fucking retardedly obvious this candle is? When this candle happens, it's like, no shit, are we gonna go to this low? You know what I mean? It's like, it's not even questioning your mind, right? And furthermore, realized what did we do prior to this? We had a 5 minute gap, right? What is this? This is the same thing, just on a lower time frame. We have this range, retracement into the range, resweep of the high. Now you might say, okay, but we created this gap. Okay, you're right, we did. What did we do here? That's some sort of rejection, in my opinion. Big wick to the upside, but struggles to close above. And then the next candle just plummets straight through it, inverses this gap, inverses this gap, and gives you the state, change in the state. It gives you every fucking thing you could look for, man. Everything. And just goes to the low. Again, realize how this is just stupid obvious. It doesn't take a genius to see this. I want to use another example real quick. I want to use another example as well from Friday's price action. Now, again, just believe me on this. We're not going to go through it, but there is hourly context here. You have an hourly gap right here, right? What happens? We have a gap. Well, we have two gaps right here tagged. So we remove the gap and we use the low, right? Now what happens? We sweep out the high. Now what happens after? We create a 5 minute gap, but we take out the high before we tag the gap, right? So the gap immediately becomes what? Lower probability. Now the fact is the gap actually plays out. The gap gets retraced to, goes back up, resweeps the high. And what does this next candle do? Straight after we resweep the high, what happens? Big wick, down close, inversion, and change in the state of a delivery, right? You get, quite frankly, already everything you need in order to take this trade in such a way. Like this. For a very quick, simple 1-to-1. And really, if you did hold it to this low, I would not hate you for it. I think that's perfectly fine. In fact, I actually think even an entry down here would have been fine too. It's way more confirmed and way more obvious that, yeah, we are, going now. And it's again, what happened? We displaced, retraced, respected this gap, made a new range, a new gap, respected it, and then immediately disrespected it. The fact that this gap was taken kind of makes us ignore that these gaps were already respected because the gap here was already disrespected. So at this point, you're believing, okay, this range has now, call it fallen apart. This high was taken, this high was reswept again, and it's continuously showing you willingness that it doesn't want to go higher. Now, if this high is taken and it doesn't want to go higher, and if now this high as well is taken and it's really rejecting it, inversing and not respecting bullish price action, what is the only reasonable idea you could have? That we're going to go back to the opposite range. And once this happens, you have to ask yourself again, okay, do we displace and do we continue towards the next low? Do we create new gaps? And the answer is yes, but do you get any retracement? No. So there's just simply no trade here. No trade in this whole area, right? But obviously we displace through it, we take out this low, we displace through it, very little hesitation here, but you never get the retracement. So what? You don't get a trade. And that's also the beautiful thing. You don't really know if you're going to get a trade, but what do you do in a case like this? Well, you have two choices. You either get out because you already had a very nice, beautiful move down, or you mark out this gap and you just wait. You just wait until this gap is hit and see what happens. It's that simple. It's really not that hard. Now, lastly, let me try to find 930 and a reasonable example. I believe this was a 50-minute gap. No. Well, it was a 50-minute gap, but it was SMT'd here, so you actually had no gap in that terms. But we could use this gap right here. Let's use this gap right here. Now you might ask, okay, but we have this right here, right? We sweep out the low. But I want to make you remember, what did I say earlier? Well, first of all, I said two things. First of all, I said you can still mark out the gaps and look for a reaction, right? And I promise you, if it's wrong, you won't get a reaction 8 times out of 10. But another thing I also said at the beginning of the video is that this only matters partially when it's at extreme points. So yes, if this right here happened after we swept out this low, yeah, no bueno, no good. But the fact that it happens inside of this range and we're very bearish and obviously, moving towards this low, it's fine. It doesn't really matter. It's just kind of unlucky. So you mark out this gap, you go on a 5-minute, you see, okay, what do I have here? Okay. Now, the first thing you do is, again, you look at the range going up. What do? We took out, or we respected this gap right here, and price sent us higher, right? Price sent us higher. Now, the problem here is, what is the problem? We create no new gaps. So you have no way to play an inversion here. No way of playing an inversion here. In a case like this, you either take displacement candles or you take change in the states, which would be this right here. This is what, I at least do. So again, as long as this gap is retraced to, we go higher into this gap. We don't care about these gaps anymore. We don't care. Why? Because we've made a new range. If this range right here is disrespected, it's already giving me the confidence I need in order to believe that we're actually going to go back and hunt this low instead now, right? Why? Because we have hourly context that we're bearish, and now 5-minute range from this low to this high, right? That retraced and worked and went higher. And now again, if it gets disrespected and we turn out to go lower, then what? I'm gonna expect that we're gonna target the opposite side of liquidity because of the higher time frame context of this. So the only way that I see fit to play it is either taking this change in the state, which would be this candle right here, and taking it, whether you take it this or you take it 1-to-1, or once this is in inverse as well. And the nice thing as well is the fact that this gets inversed with a fucking Diddy candle as well, or a displacement candle. So either taking an entry here or taking an entry here would have been, in my opinion, totally acceptable. But if you are taking this trade here, I want to also just realize that you need to be using the stop loss. I don't care that in hindsight we see that it didn't even go up. You need to use the stop loss. And in a case like this, where your 1-to-1 is slightly below this low, you have to just keep your 1-to-1 like this and go break even at a very minimum. Once this low is taken, you need to go break even. 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 The only exception is, let's say I took an entry here for whatever reason, right? But let's say I have very nice, clean 5-minute gaps that could potentially play me lower. If I do have this entry and I'm not 1-to-1, there is a chance I'll keep my stop loss at the original place and I'll let it retrace into this gap and sweep out the low. And when this low is swept, I'll go break even. Just because I know when we have this clean of gaps, there's, still very much potential, but I don't want to overcrowd what I'm already saying. So I just want to keep in mind, when you have this kind of scenario, the second this low is hit, 9 times out of 10, you go break even. You go break even, right? And again, in order for you to, fully comprehend this, when we create this new range and we have no inversion, you either wait for displacement, or you use change in the state, or you completely skip it, right? It's up to you. So again, in my opinion, this would have been a pretty valid entry had you taken it. And whether you take it for a 1-to-1, which I would have done, or hold it to here, it's perfectly fine, because this is a target that you really want to see. But I just love 1-to-1s and my mental is so good with them, so I'd rather stick to them. All right, I think I have said everything that I wanted to say and gone over enough stuff. I'm really thinking, but I can continue making videos hopefully, and explaining once a while kind of how to view it, because the more you kind of view it the same way I view it, or listen to how I view it, the more you'll start viewing it, the same way, essentially. And I want to say, if you guys are going to do this, right, use hindsight as your advantage, but stay realistic. Realize how every single time I've had, opportunities here where I, obviously saw that the trade worked out, but I still said I would not take a trade here. Why? Because I'm being realistic. I'm using my judgment, and I'm really asking myself, would I really take this in a real market scenario? Right? If I'm seeing this, would I really take this? And you have to be really, really honest with yourself, and you can't be lying to yourself, right? You have to do that, right? You have to ask yourself, why or why not would I take it? And you need to find an explanation, right? In order to justify it when the market actually happens, so you don't just take bad trades. But yeah, I think that's about it. I really want to say, I don't know what more I could say right now that will, help you, but I might try to make more of these videos, and hopefully it will be, of